Hey there, welcome to the show. It's The Hash. It's CoinDesk TV. I'm Zach Seward. We got Wendy O and Sam Kessler. They look confused. They can't hear me. That's not good. You can hear me now? No. Yes?
We can hear you now.
Love that. Let's take it from the top. Welcome to The Hash, everybody. You're watching CoinDesk TV. I'm Zach Seward. We got Wendy O. We got Sam Kessler. We got the news of the day to get to, and it is going to be fun. Let's do this thing. I'm starting us off. We're doing a quick update on Binance. According to a report in The Information, Binance nearly shuttered its U.S. operations to protect its global bread and butter. Now, Binance is a top dog when it comes to crypto volumes globally, and they decided maybe at one point to cut off the U.S. to preserve the breadwinner of the global brand. According to The Information, at least, that was not able to be decided upon, and the Binance US continues apace. So we'll talk about that one first, and then we'll shift gears and talk about some really interesting data about Binance still being quite operational in China, despite an alleged crypto ban over there. Let's talk about the US thing first, and then we'll shift gears over to China. Wendy, what do you think about this report from The Information and what's being alleged here? Smart move, bad move? What do you think?
I don't blame them. Why would you stay somewhere where you are not treated best? A really good friend of mine, Mark Moss, always says, go where you are treated best. And I remembered that, and I still remember that today. Why would any crypto company want to continue to stay in the United States of America? All they seem to be doing is just wasting their money. I want to say that Ripple has spent over $200 million approximately on their lawsuit against the SEC. And that money could have been used not only to, hire more people, to build, to expand, but I do know that they have a very extensive educational fund that they do send out to different colleges or, different communities to help people actually understand what blockchain technology is and about, whatever. So I feel like a lot of people are just kind of tired. They're getting fed up. We're seeing a lot of companies move over to the Middle East and over to Asia. There's a lot of money flowing over there. In the United States, not so much. And we're also seeing a lot of other companies create shops, set up shops in other countries. I want to say, and please correct me if I'm wrong, I want to say A16Z created something elsewhere. Coinbase and Gemini and all these other companies are establishing branches overseas because that's a lot more regulatory friendly. And I feel like the U.S. is kind of shooting themselves in the foot. And I want to say there's some other reports coming out about how over leveraged we are monetary wise. And it just is not looking too terribly great here. And I'm also considering relocating as well, because if I can't work here in the U.S., if I can't do my crypto stuff, then what am I going to do? That's no fun. And also, I like to be able to be a content creator. And I don't know if I could do that in the US anymore because we don't have any clear types of guidelines.
I mean, if I can maybe chime in on this, I think whether or not it's a good thing for crypto, it seems like the intended outcome or one of the intended outcomes of, Gensler's crackdown on the industry. Whether or not any of these cases or most of these cases have been settled yet, clearly it's having the intended effect of chasing business out of the United States. And I agree with you. I don't know why they would stay in the United States, because not only is it a huge headache, but as recent reporting about, for example, Binance's huge China market has underscored, the U.S. is not a huge market for Binance or for many of these other exchanges that are not primarily based in the United States. So I don't know why they'd stay here for that reason alone. And then one more thing that I thought was crazy, about a lot of, the stuff with this whole report is just around the board meeting itself. Where there was division within the company around what to do here. It's not like they were kind of wavering and CZ decided, okay, we're not going to do this after thinking he would, this being pulling out from the United States. There was a board vote, and the head of the U.S. exchange decided that he didn't want to leave, who chairs that board, and that's kind of what happened. I'd love to have been a fly on the wall of that meeting. Wendy, what do you think?
Just really quickly before giving it over to Zach, I feel like Binance did the best that they could. They were operating in the U.S. They had all these products and services. The U.S. is like, hey, we don't really want you to have these here. You can't do that. So when they were told that, they went ahead and left. And that was due to no regulatory clarity by the SEC or other public servants. And in response to them, kind of closing off the U.S. market, because I remember Binance, I used to trade on Binance. I loved it. It was a really great exchange. And then I want to say it was summer of 2020. They're like, okay, you have to KYC. And if you're a U.S. citizen information. You can't use it anymore. So they gradually pushed people off, but they did it in a very ethical way. And in response to that action from the SEC or whomever, they created Binance US, which had like 5 different trading pairs, and you can basically just buy, sell, and do limit orders. They didn't have anything, they had a very bare exchange there, which they wanted to become as compliant as they could. And again, that still wasn't good enough for the US, which again should be very problematic. And I know that's not how the law works, but I wish that it did, and they could just see all of the horrible choices that the SEC has made, and Binance and other crypto asset companies have been doing their best to accommodate non-existing regulation. Zach?
Yeah, good segue to the other piece of Binance news that came out today by way of the Wall Street Journal. Something like 20% of global volumes come from China. Now, this is a surprise to some observers in crypto who say, hey, wait a minute, China has a crypto ban. A lot of informed observers, especially Emily Parker, who works at CoinDesk, have been sounding this alarm for a while. This is not a ironclad ban by any means, right? This is a very porous ban, and crypto activity has been taking place in China despite this alleged ban for a number of years. Now we get some fresh data from some reporting by way of the Wall Street Journal suggesting that China really is a big part of the mix when it comes to the total trading volume that Binance sees on a daily basis. Pretty crazy to see this breakdown, and really speaks to the continued activity, interest, and excitement that crypto finds in Asia relative to a more dour and gloomy picture here in the US specifically. You're seeing trade volume by country. China, South Korea are the top 2. Let's talk about this report as well. Sam, I'll throw this your way. What do you think?
Yeah, I mean, there were some crazy things in this report, and I'm glad you flagged Emily Parker. She has been sounding the alarm bell, or whatever you want to call it, bell, on this for a while. This ban is not really a ban, as with many of the things that we hear coming out of China. There are ways to get through them. VPNs are ubiquitous in the country. But anyway, some of the crazy things in this report, I mean, it was not just the number of, or the amount, rather, of cryptocurrency, or the value of cryptocurrency that's traded on the platform. It was the number of wallets as well, or the number of users that Binance apparently has recorded as it's transacting there. I think it was close to 1 million. 900,000, I think, is the number that's coming to my mind. Don't quote me on that, but it's something massive. And the other thing that I thought was crazy about this too is that it really does just highlight the opaqueness of Binance as a company. The fact that not only did we not realize that China, we being, the general public, realized that China was a big customer of this platform, which makes sense. They didn't want to show us this, but for reasons. But not only did we not realize that it was a big customer, but apparently the biggest. That's just crazy. And it just shows you how little we still understand about Binance, like it or not. Wendy, what do you think?
I've got friends that are very active in crypto and are builders, do all kinds of really great stuff, and they are in China. And for the last couple of years, they said, no, China, it's not that crypto is really banned here. People are still using it. So I just feel like there's a big disconnect from what's actually happening and the news that we're presented in the United States. And again, has nothing to do with CoinDesk reporters. It has to do with more mainstream media news and some of the reports that they're giving out, talking about what's going on in China. I feel like a lot of these reports are not necessarily accurate. And again, the only thing I do want to pick on you for with the wallet creations, or having more using that number for wallet creations as active users, I don't feel like that's ever accurate. Like, I always have at least like 2 to 3 accounts on different exchanges for different OPSEC reasons, for different positions that I'm opening and different types of trading styles I'm doing. So that's the only thing I want to say. But I do believe China's been playing 4D chess with us the entire time. They've kind of been silently doing things. Yes, that they're very controlling over what their people can and can't do. But at the end of the day, they're not going to let the U.S. outdo them when it comes to tech. And I just feel like America just keeps looking like a bigger and bigger laughing stock of the world at this time.
Just wanted to put a finer point on what Sam said about, Binance being a black box, right? And I think that's very true and very remarkable feature of the crypto space, that these open ledgers, which provide unprecedented transparency toward financial matters, still are largely sort of administered through these centralized exchanges, centralized companies that are the opposite of transparent, are very opaque. And it takes reporting such as this to reveal some of those details that otherwise aren't on chain, aren't visible to anyone who wants to look into it. So anyway, I just thought that was a good point, Sam. Shout out to you.
But sir, the banks, traditional finance, you can't track cash. Anyways, I could talk about this all day long.
Are they KYCing China, I mean, that's another question too. All the users in China, like, is there a database somewhere in Binance? Because that goes to the account thing as well. Like, I didn't read closely enough, but I don't know if those were Binance accounts or if those were addresses, the 900,000 figure that apparently was the right now. I don't even know what that corresponds to. But if there's any number, there's probably a list somewhere. And if it were really illegal, we know who has it. So anyway, it's just a really interesting story.
Is indeed. In the report itself, I will say it's noted as active users. Whether or not that is an accurate representation, one-to-one, wallet to person, hard to say. It's a level of nuance that sometimes doesn't make it into the final cut. Anyway, Wendy, you got the next story.
Wendy and her 80,000 wallet addresses for the most random things ever. My CPA absolutely hates me. And if you guys need a CPA, you can use mine. Anyways, we got to talk about this story because I don't like Worldcoin. And yes, I'm fudding it live on the show, CoinDesk TV, the hash. Okay, so the Kenyan government suspends Worldcoin activity on financial security and privacy concerns. And you know what? I don't blame them for doing that. This is one time when I do think the government should step in and protect their people. For the most part, I can protect myself. I can handle myself. I'm from the streets. But when we're talking about something like this that is directly infringing on your privacy, like they're literally giving you $50 for all your biometric data, which is really scary. Like, I don't know who these people are. If somebody was to walk up to me and like, hey, Wendy, can I have one of your socks? I'd be like, heck no, you can't. I wouldn't even let somebody look into my wallet or my purse. But anyways, Kenya suspended Worldcoin operations due to concerns about public safety and the integrity of financial transactions. The country's financial security and data protection services will investigate the legitimacy and data protection of the project. And then the Kenya Interior Cabinet Secretary said any individual or legal entity found involved supporting, aiding, or abetting Worldcoin activity will face appropriate actions. Oh, wait, the number went down. Registered users were entitled to 25 free Worldcoin tokens worth about $2. You can't even go to McDonald's and use the value menu anymore for under $2 or $2. Come on, man.
No, the token is like $2.
I read that wrong. Wait, 25. Okay. No, says registered users were entitled to 25 free Well, whatever. I don't care. It's still not enough for me. Go ahead, fact check me, correct me.
That's okay. I just looked up the price. CoinMarketCap says $2.50 per Worldcoin. So yeah, that's a sweet $50 airdrop for your retinal scan. Full disclosure, I did this last week in Japan. I offered up my eyeballs to Sam Altman to get a world ID, and I'm glad I did it. So you guys can FUD this project all you want, but I'm ready for the AI future. My unique stuff is encoded. It's all encrypted. I think that there's a lot of craziness about this story because it is and has always been rather absurd that this is the security mechanism for preventing Sybil attacks on this network. I will say it's crazy, but you know what? I did it. So
are you an investor now? So now do you have to disclose? I'm a Worldcoin investor. I'm a Worldcoin whale. I'm
a respecter of the orb. I go up to the orb and I just go up to it. I just have my world ID, so don't worry about me. But I did it. I did it. I live to tell the tale.
You expect me to FUD it. I can't believe I said FUD. I never say it, but you expected that from me. I'm not actually going to do that this time around. I actually think that Worldcoin, despite all of the insane privacy, issues and things that are glazed over, is in many ways, honest attempt at finding an application for crypto. And we've been asking for applications for the longest time. I mean, we do KYC with Binance. We do KYC with Coinbase. We give our, face scans to our iPhones, and we use those scans to, log. It's just, I do think that a lot of what Worldcoin is trying to do is, yes, 100% antithetical to the founding ethos of Bitcoin and Ethereum and a lot of these ecosystems. But that being said, I do think that it might be in a world where we're willing to give our identity to even a centralized platform in a lot of ways. I think it is kind of an iterative improvement on our existing, identity apparatus. That being said, I do think it's fraught with a ton of issues. I think that the fact that they have this Worldcoin leads to this really weird, cynical incentive game where people not in the United States and not in the West are encouraged to, give their eyeballs for $50. Even if it was $2, it can buy you a lot more in some places than it can in the United States. I think that's really cynical. I also think that they haven't thought about a lot of the potential abuses, not just in terms of the privacy, putting that all aside, but in terms of people buying your KYC or people pretending to be Worldcoin and scanning your retinas and using those for who knows what. I think there are a ton of things around the edges, but I don't think that Sam Altman is trying to harvest our eyeballs to make money, because he's got a million of other ways to make money off of AI, even though he apparently doesn't own
data.
Much of
but
that.
this type of data is worth a lot. Like, that's not something that is spoken about or talked about, but people's data, like our search history, like the biometric data, all of this stuff, like anything that you can extract from a human is worth money, and there's companies that are willing to buy this for a lot of money. So I would love to see the disclosures and see where.
Sorry.
Huh? No, go
Sorry.
ahead.
Go ahead.
No, I was just saying,
if they're encrypting it. Yeah.
Are they encrypting it?
There's still. I mean, yeah, that's the idea. They're using proofs and they're encrypting these things on device. So it's no less encrypted. I can't believe I'm defending anything in general, but
I'm going to save this, and when I see you, I'm going to be like, "This is what you said."
Anyway, hey, you got to play, devil's advocate, and maybe that's what we're doing. But it is encrypted theoretically.
Do you want to wear my
if we
crown?
trust these proofs, why do we trust the proofs on Ethereum and these ZK platforms that are taking billions of dollars worth of money? The computer science is no less, secure theoretically in this case than in all these other cases. She's got the crown on.
Preach, Sam. Preach, brother. Worldcoin.
We don't debate enough, at least when I'm on.
Let's do
not
it.
enough arguments.
I had to do it because, it just makes for good content. When you have the one guy in the show who's given his eyeballs to Sam Altman, and you have the other people on the show saying it's awful, that right there, that's why you're here. Thanks, viewers. All right, we're going to take a break. We're going to break it up here. Break it up. We're going to talk about the next wave of weird things to happen in the wake of a major Curve Finance exploit. This one involves Aave. Sam's going to break it down for us. That and more here on The Hash. Have a good one. Woo!
Everybody, welcome back to The Hash. It's me, Sam, joined by Zach and Wendy. Of course, we couldn't end this episode without talking about all the craziness going on in DeFi markets after that huge hack on Curve, one of the biggest exchanges on Ethereum over the weekend. You might remember one of the outcomes of that hack was that the price of Curve, this big important token, sunk, which put a huge loan, a huge position on Aave, the lending platform, and a bunch of other lending platforms at risk. So essentially, Michael Egorov, the head of Curve, had a bunch of the supply of Curve, put about 30% of it in collateral to back loans that he used to buy who knows what. Apparently houses were involved. Who knows? You can look at reporting on that in CoinDesk and elsewhere. But anyway, if that loan gets liquidated, a bunch of bad things happen for the entire DeFi ecosystem because this $200 million worth of tokens gets sold to the market and further suppresses the price of Curve, this really important token. So now the news today, as Sharia has reported, is that Aave, its risk management, partner called Gauntlet, which is, used throughout DeFi, they have proposed now for the second time, actually, that Aave block, or Aave's community block borrowing of these Curve tokens, essentially making it so that positions like this can't get bigger and can get wound down more easily. I don't know. It's a crazy story. Zach, what do you think?
Yeah, I mean, this is DeFi composability at its worst, right? Like DeFi composability is heralded as a way to make things innovate on themselves faster. But then you see situations like this where there's all this interconnectedness and subsequent platforms get ensnared in what previously would have been an ugly incident confined to one thing. Now it sort of spreads across the ecosystem. I did want to ask you about that Gauntlet thing, Sam, because that's a detail that I think is worth mentioning. The Gauntlet had flagged a similar problem previously that wasn't acted on. Previously, meaning like weeks or months ago. Is that right? The first instance of Gauntlet, exactly, raising red flag. So a lot of people are sort of like grumpy that that advice wasn't acted upon earlier. But now you have people stepping in the heat of battle, trying to address again some of these ramifications that are rippling out across the DeFi ecosystem. And, we enter into really funny situations where all of a sudden Justin Sun is backstopping a pretty critical piece of the DeFi landscape. So anyway, I think, again, to me, these are composability stories. I think composability in DeFi is super cool, but also the flip side of composability is this interconnectedness that ultimately can lose people lots of money through no fault of their own, right? And so I think we're seeing that kind of play out, again, with two really foundational pieces of the DeFi ecosystem. So that, to me, is the big picture. But some of that granularity, some of that detail, especially around some of those advisements from Gauntlet, I think is worth picking up on. So thanks for flagging that as well. I don't know, Wendy, what do you think about this? The whole Curve thing and the whole Australian mansions. There is a degree of richness in this story as well.
Okay, so to me, there's a lot of different parts here. The thing that stands out the most is the crypto DeFi contagion, because we saw the crypto contagion with centralized entities, and now we're seeing it with DeFi. And we're seeing this because it sounds like a lot of people over-leveraged, over-collateralized, bet too much money and didn't practice risk management. And now we're starting to see somewhat of a collapse of the DeFi sector. Do I think DeFi is going to go away? No. Do I think DeFi is still in beta? Yes. I think that we will figure out how to recover from this. I don't know how long it's going to take. I don't know what the outcome is going to be. I think it's awesome that Justin Sun stepped in, but at the same time, the more big whales we have step in, wouldn't that essentially kind of centralized a lot of these entities in some aspects, depending on how much liquidity they're adding or what the deal is with the tokens? And then the separate story is the gentleman that bought a lot of very expensive real estate. And I know crypto Twitter is like kind of jumping on it and talking about it, but that's kind of pocket watching. And I don't know if that's really relevant to this particular story. That person had specific tokens because he was a founder or because he did X, and it was essentially payment for his services. So what that person decided to do with that money that was not stolen from the project, that he was granted either due to a DAO or to the community or however it was structured, that's kind of his personal business. And I don't think that necessarily relates to the particular story of the DeFi contagion. However, if he is over leveraged and he owns a large amount and that's causing issues, then it could potentially relate. But at the same time, I don't know if they're directly related or it's just a fun talking piece because people love drama. Sam?
I mean, the last quick point that I'll say here, well, two things. First off, I recommend that everybody read the op-ed that Daniel Kuhn posted to CoinDesk. I think it was today or yesterday. DeFi died and we didn't even notice, which covers, obviously, with a more opinionated voice than we're giving even here, what went on and why it's scary for DeFi. Some of the stuff you mentioned, Wendy, with big whales. And the last thing, that I'll say on the whole Curve situation is just that I think it really does underscore the role that CoinDesk and other, crypto-focused media outlets need to continue to play and play in a bigger way in terms of calling out potential, red flags. This loan we had reported on about a month ago was public knowledge. And yet Curve was considered a blue chip decentralized finance protocol in the same realm as Uniswap and Aave and others. And I'm curious if other red flags exist out there for either those platforms or other quote unquote blue chips. This is something that people should have been yelling about rather than just, talking about in side conversations for a while now. So anyway, we should have seen this coming. Maybe not the hack, of course, but the systemic risk posed by that specific loan and the token system that he had put together. Okay, Zach, over to you.
Hooray for crypto journalism. Good stuff. All right, we're going to talk quickly about GameStop.
Well, I don't know.
Hooray to Tarun. Hooray for Tarun at Gauntlet. Anyway, so we're going to talk about GameStop here. GameStop, video game retailer, one-time meme stock, had adventured into crypto and is now removing the wallet functionality from its iOS and wallet extension apps, citing regulatory uncertainty. Can't do fun stuff with tokens in the US because you might get sued as an unregistered securities exchange. That's what GameStop is saying, at least. We'll talk about this briefly. I don't know. What's there to say? Wendy, what do you say in 10 seconds about GameStop?
This is not shocking to me. The predatory actions of the SEC have completely outdone themselves, and I'm very, very proud to be an American.
Sam, top that. 10 seconds.
The memes are over. GameStop, Gensler, wallets, I don't know, all these buzzwords in one story. I feel like,
WAGME.
Wendy's going to cry from this. They're not over. WAGME might be over. And I think this is a perfect story to kind of encapsulate the depth of that attitude.
Good stuff. All right. Well, we're going to have fun staying poor over here. I am Zach Seward. That is Sam Kessler. Wendy O. Americans all. We'll talk to you tomorrow. Have a great day. Bye.